Hi guys, and welcome back to episode 11 of the I Know First Weekly Market Review. We've created an artificial intelligence predictive algorithm that forecasts the stock market on a daily basis. Our goal is to find the best investment opportunities and beat the stock market. Today, we're going to take a look at some of our past AI forecasts that we've shared with you guys, go over the market performance from last week, and tell you about an alternative to the American market which isn't doing too well. I Know First forecasts over 13,500 assets on 6 different time frames on a daily basis. This includes short, mid, and long-term forecasts. I Know First also covers 50 major global stock exchanges, including the US, Europe, and Asia. Here is the I Know First team. The I Know First algorithm was created and crystallized by Dr. Reutman, who has 23 years of experience in AI and machine learning and studied at the Weizmann Institute of Science. I Know First is trusted by the world's leading hedge funds, investment houses, banks, family offices, brokerage firms, as well as high net worth individuals. This includes Bank of America, Mitav Investment House, and more. On February 13th, we posted a video comparing Alibaba and Amazon and showed you guys which our AI preferred. We showed this 3-month forecast where you can see Alibaba is at the very top of the forecast with a high signal and a pretty good predictability. In this same forecast, you can see that our AI forecasted Amazon to be a top stock that you should short as it has a negative signal. If you bought Alibaba on that day, then you would be up 20.93% in just 1 month. This impressive gain was all while the S&P 500 went down close to 5%. If you shorted Amazon when we posted this video, you would be up 13% in just 1 month, which is again better than the S&P 500. If you want to watch the full Amazon versus Alibaba video, click the link in the description. Here, we have a past forecast which had an average return of 13%, while the S&P 500 was down 5.68%. Our AI algorithm not only creates long forecasts, but also makes short forecasts. Amazon was also in the forecast as a top stock to short. So even when the market is down, like you see here, our AI is still able to find profits. Let's look at this week's market performance. In accordance with the I Know First forecast, which was negative, the Nasdaq S&P 500 and the Dow Jones all went down a big amount this week. The market continues to slip due to Trump's tariffs and market uncertainty. Luckily for you guys, I Know First doesn't just forecast the US market, but it covers 50 global markets worldwide. So let's find a good alternative market that our AI thinks is a good investment. The Chinese market has been a growing market since the start of the new year. While the US market is being hurt badly, China's market is trending up. Our AI is forecasting the Chinese market to be a top index to buy for the long term. Let's look at the world forecast. On February 23rd, you can see the MCHI, which is the Chinese index, was the second best index our AI was forecasting, and the S&P 500 and Nasdaq 100 were a little lower than it. Now 2 weeks later, the S&P 500 and the Nasdaq 100 have fallen way back in the forecast. Both of their signals were cut in half. However, MCHI has stayed in place, which is good. Why did the Chinese market go up? Some of the catalysts involved in the Chinese market making a comeback were cutting interest rates, home purchase down payments were reduced, China announced they would be putting $71 billion towards a stock market stabilization fund, and the Chinese market was trading at a big discount. Now, why is the Chinese market still a good investment now? The Swiss bank is projecting the Chinese AI market value will be worth $480 billion, which is a big increase from the current $350 billion valuation. Overall, our AI is projecting the Chinese market to be a top investment and a good alternative to investing in the highly volatile US market. On February 23rd, we posted a video explaining our AI thoughts on Nvidia before their earnings. What we pointed out was that Nvidia had a positive forecast. However, there were a few issues. One was that we noticed that right before earnings, Nvidia's signal was pretty low compared to a couple weeks ago. Here was what we were seeing with Nvidia's signal. Roughly a month before, Nvidia's signal was almost double, and then it was cut in half right before earnings. This made us weary about investing in Nvidia before earnings. We also showed Nvidia's technical analysis, where we saw a double top, which is a bearish sign, and then we saw 2 lower highs right after. We said this was not a good sign, and normally we see the stock price drop after these patterns. Here is the current chart for Nvidia, and we can see that we were correct. The Nvidia price continued to fall and is now down 30% from its highs. If you want to watch this Nvidia forecast video, we will link it in the description. Thanks for watching. If you enjoyed this video and want to see more AI forecasts, then don't forget to like and subscribe. Here's to smarter, AI-driven investing. See you in the next one.